Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is February 15th. It's 2023. This is the Morning Forex Technical Report, where we take a look at the major currency pairs and take a look at them from a technical perspective. What are the biases? What are the risks? What are the targets that we have to look forward to? We just had retail sales come out in the U.S. much stronger than expected. Came in at 3.0 versus 1.8 expected. The retail sales ex-auto was also stronger at 2.3 versus 0.8. And the control group was up 1.7 versus 0.8. So big rebound from last month's declines. And that shows that the consumer is still alive and kicking, but the Fed is still in play and kicking as well. So let's get into some of the technicals. We'll start with the euro versus US dollar. And this is the hourly chart of that currency pair. I wanted to spread it out wider because it's getting out of the range here. And what we saw in trading yesterday was that the low price yesterday, in what was a very volatile day, the low price came down and tested these swing lows going all the way back in time through here and here and here. And then we moved below it here, and that became resistance, and it became support again. So the low came right down to that swing area that was earmarked as a level that we need to get to and through on the downside. Couldn't do that. The market prior to that, it looks like moved up and tested the 38.2% retracement. That is at the 107.98 level, and also tested these swing lows through here. All this came after the CPI data yesterday. Had the market moving ups and downs and all arounds, and ended up closing the day below the 200-hour moving average, but above the 100-hour moving average here, but respecting the support and resistance levels. In trading here today, now is when I'm going to kind of move in. Now that you have that visual in your mind, I'm going to move in a little bit closer here. And what we can see in trading here today, that the price moved back below the 100 and below this swing area here. It should have sent the price further to the downside, but didn't. We moved back to the upside in preparation for the retail sales data that just came out much stronger. And we then fell back below the 100-hour moving average. And you're seeing we're moved even lower after the much stronger retail sales pushed the dollar back to the upside. But what we did hold here is support against this old low from last week's trading. Earlier this week, we did on Monday, we dipped below those levels, only to find the market rebound back to the top side. So we are sort of respecting the lows from last week near the 106.68 level. If we move below that level and then move below the 106.54 level, that would open the door for further downside momentum. And if we take a look at the daily chart, that momentum could see that price move down toward the 106.15 level. That level all the way down to 105.73 is targeted from different swing areas through this period through here, where the market had a ceiling in play, and then it became a little floor through here in the month of December. In January, got a little messy, admittedly, for this four-day period as the market tried to figure out if it could go lower from here. Couldn't, start to move to the upside. Now we're moving back down toward this area right through here, 105.73 up to 106.15. If the price can again get below the low prices that we saw last week, early this week at 106.54, and the price low from last week, 106.68. What do we want? What do the sellers not want to see? It doesn't want to see the price move back above this swing area, back above the 200-hour moving average. That would be a no-no to get back above those levels, and certainly above the 200-hour moving average here would also not be beneficial for sellers looking for more downside in this currency pair. So be aware of those levels. That's the euro versus US dollar. Let's take a look at the dollar versus yen. And we've been looking at the 4-hour chart just to spread it out because it goes back a long way now. We've seen the dollar yen move to the new highs, higher levels here today. And as a result of the retail sales, we took the price above the 61.8% retrace. So this move to the downside, that 61.8 comes in at 133.98. Somewhere around or very close to 134 level. The high price has since rotated back to the downside, currently trading at 85, but still trying to maintain the bullish bias here to the upside in trading this week. We saw the price move up to the swing area through here. Again, this is a 4-hour chart. So this is the price action for the week in this box away from that dashed line. We saw this week was the price move above this swing area. The swing area was pretty decent ceiling here, and also the 50% retracement of the move down from this high to this low. So this whole area right here, where the yellow area is a key level. And in trading late yesterday and early today, the price, or today, I guess the price did move below those levels, but could not sustain the momentum. We started to move back to the upside here, and looks like that is the favored trend here for the dollar versus yen. Let's just take a look at the 5-minute chart here for giggles. This is the move to the downside that we saw in the early Asian session that took the price back below that 50% retracement. But what I like about this rebound here is once we move back above the 200 bar moving average and the 100 bar moving average, what do we do right here where the two moving averages converge? We found support. So sometimes just put it on the 5-minute chart every once in a while, and you can kind of see these little clues here where key 100 and 200 bar moving averages hold support, and you never know. You never know what might happen after that. We also found support buyers here against the 100 bar moving average before moving to the upside here. So just pay attention to that. Just a little tidbit of advice for your trading here today. This pound versus US dollar, cheering on a 10.1% CPI year on year. Move has been trending to the downside and trading here today. We moved below the 100 and the 200 hour moving averages on the way to the downside. Admittedly, we traded above and below the 200 hour moving average here before rotating to the downside into the early New York session, and then moved down to even lower levels after the retail sales data, taking the price below our low price for the week right here at 120.30, and moving down toward the 120 level here in trading, and also this swing area through here where we had some swing lows and swing highs, and I'm kind of guessing that that level is somewhat important going back in time. And indeed, if we go all the way back here to the month of December, you can see how this area right here, this is that same yellow area that we're in right now. The price found support. Buyers got a little messy here, and then reestablished support, moved below it, and then back above it, and that was the last time the market saw that area until more recently, last week's trading, when the market fell below that level. So this is the importance of the 120 level, important from a natural support level as well. So 119.91 up down to 120.10 is a key level to get to and through. As you can see, the price is rebounding back at 120.37 now as we speak. But let's take a look at that 5-minute chart here. Because in trending markets, what do? You have sharp moves to the downside and corrective moves higher, and a lot of times if you take a look at the 38.2% retracement of the trend moves to the downside, that level 38.2 to 50% retracement area, that level tries to hold. So what does that mean? So here's a trend move to the downside. Here's the 38.2% retracement of that trend move. And as you can see, the price comes into that area, stays below the 50% retracement level, and we see sellers. So this is giving a clue for the sellers to stay in control. This is where the market, the 200-hour moving average, was located. As you can see, the waffling up and down here, consolidation, but we stay below the 38.2, stay below the 50%. Then we started this next trend leg to the downside, and as you can see here, we've rebounded to the 38.2% retracement. So far, the sellers are staying in control below the 120.43 level, aren't they? It would take a move above that 38.2 of just this move right here, 38.2, get above the 50% retracement to give the buyers some hope that the price is outside of the trend move to the downside. So pay attention to this area between 120.43 and 120.55. So far, it's just playing out like a trend market. I would expect that the sellers would reemerge, and we could see a new low here in the sterling versus US dollar as the trend to the downside continues in that pair. So a little lesson, a little look at some of the technical levels here today. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.